You're listening to AI PRISM from Seoul Economic Daily.
It's Thursday, July 2. Let's break down what's happening in Korea's financial sector.
Right, let's get into it.
Assessing how this incoming data alters Korea's financial stability outlook, signals critical compliance and positioning shifts for you and other foreign institutions. Four converging forces demand your immediate attention today. The one hitting 2009 lows, a sharp #co-SPI sector rotation, extreme memory chipflation, and, a corporate credit freeze.
Well, the Korean won closed at 1,554.9 per dollar, marking its weakest exchange rate since 2009.
Wow.
Yeah. Exporters hoarding foreign currency drive this liquidity drain as they actively choose to hold USD rather than convert it back to won.
Right.
Foreign investors sold 1.7 trillion won, or 1.1 billion USD from the #co-SPI.
9 consecutive sessions define this institutional sell-off.
Precisely. Retail investors net bought 233.7 million USD in U.S. equities.
It's like a store making record sales, but the cash register is empty because everyone is keeping the exact change.
Yeah. That is a perfect analogy. This currency drain creates a bizarre paradox, as Korea's biggest export engines are absolutely booming on paper.
Right.
Extreme memory chipflation drives this boom.
Which just means rapidly rising prices for memory chips.
Yeah, exactly. 21 USD represents the PC DRAM contract price in June.
Incredible.
And 28.80 USD marks the NAND flash price over that exact same period.
Those numbers are staggering. So what does this all actually mean for tech valuations?
TrendForce projects a 15 to 20% Q3 DRAM price jump.
Okay, that is massive.
To put that scale into perspective, Samsung's implied market cap at a PER 10x valuation sits at 3,500 trillion won, or 2.5 trillion USD, versus its current 1,800 trillion won, or 1.3 trillion USD.
Wait, despite this massive fundamental upside, the upcoming Korea Green Transformation Policy accelerates a #co-SPI rotation toward shipbuilding, defense, and power equipment ahead of July.
It really does.
If DRAM prices are up 7x since 2016, why are investors actively rotating away from these obvious market winners right now?
Because systemic fear drives capital away from perceived peaks to seek safety.
I see.
The Joongang Group liquidity crisis froze BBB-rated corporate bond markets immediately.
Contagion fear caused this market freeze.
Right, meaning lenders now refuse to finance any sub-investment grade higher-risk debt simply because one major player showed distress.
Wow, just completely locked up.
663 billion won, or 430 million USD, in BBB-rated public bonds mature this calendar year.
Doosan and Hanjin face 2 imminent rollover decisions, where they must secure new financing to pay off that maturing debt.
Exactly.
Which issuer will be the first mover forced to test this completely frozen debt market?
Doosan will test this frozen market first, which highlights how Korea's financial system risk is tightening as the transmission channels between surging tech earnings and broader credit liquidity are failing. The next regulatory and credit stress point is the impending rollover of 663 billion won, or 430 million USD, in BBB-rated bonds. The convergence of memory inflation with a won at post-crisis lows proves you and other foreign institutions must navigate multiple simultaneous systemic stress signals.
Watch the upcoming KGX policy announcement in July, specifically the energy storage system incentives, which could fundamentally re-rate utility names. That's today's AI PRISM Finance Daily. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI PRISM is a Juan Eifer award-winning series. We'll be back tomorrow.
You've been listening to AI PRISM from Seoul Economic Daily.